Hello students and welcome to the lecture. So students, as we noted in the previous lecture, we had started our discussion over the banking and financial abbreviations. Okay. And we have covered the part 1 in the previous lecture. Now this is going to be a part 2. Okay. The tricks and things that we had discussed in the previous lecture, the importance of this particular thing of banking and financial abbreviations we had already discussed in the previous lecture. I hope that you have gone through it in a proper manner. You have revised the facts and figures that we discussed in the previous lecture before you have come for this lecture. As many times I have reminded you, it's for your own benefit. Okay, so let's start this lecture. Again, the course of action that we are going to follow is the same as we followed in the previous one. Like the banking and financial abbreviations, we will discuss. At last, we will discuss the summary of all the banks and financial abbreviations that we would have discussed in this lecture. But as usual, before starting this, there is a small disclaimer presented over here that we are required to discuss and understand. So disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and you have any concerns or issues, please contact us at sathee@iitk.ac.in and we shall remove the images. Now, let's begin with the topic. So first you can see here that basically we are going to talk about the IEPF. IEPF stands out for Investor Education and Protection Fund Authority. It has been constituted under the provisions of Companies Act 2013 for admission of investor education and protection fund. Then we have IFC. It stands out for International Finance Corporation, which is actually an international financial institution, offers investment, advisory, and asset management services. Investment, advisory, and asset management services to encourage the private sector development in developing countries. Okay. Then we have IIB. It stands out for International Investment Bank. It is actually a multilateral development bank which got established in 1970 in order to promote the economic development and cooperation of the member state. Headquarters located in Moscow, Russia, and the European regional office is actually at Bratislava, Slovakia. IIBF. Indian Institute of Banking and Finance. It is a registered company, imparts the education in banking and finance. Okay. The IMF. International Monetary Fund. An organization of comprising 189 countries working to foster the global monetary cooperation, secure financial stability, facilitate the international trade, promoting the high employment and sustainable economic growth, and to reduce the poverty around the world. IMPS, the Immediate Payment Service. It is an instant real-time interbank electronic fund transfer system in India. IMPS actually offers an interbank electronic fund transfer service through the mobile phones. Okay. Then IMT. It stands out for Instant Money Transfer, which is actually an innovative domestic money remittance facility, allowing the customer to send the money or to receiver only by using the receiver's mobile number through the bank's ATM and retail internet banking facility. No other kind of things are required in order to avail this. Okay. Now let's move forward. Here we have the IPO. Like IPO, already the acronym we had discussed in the previous lecture, if you remember. Okay. I had told you The IPO stands out for the initial public offering. Okay. First is the full form, initial public offering. It is actually the first time that the stock of a private company is actually being offered to the public. All right. Like you can say the normal people could purchase the stocks and the shares in a private company. It is often issued by some smaller, younger companies which are seeking capital to expand, but they could already be done by the large private owned companies also looking to become publicly traded. Okay. Like we could say generally the IPO is launched by the smaller and younger companies which requiring the money but they do not have it, and actually they required it from the public. Okay. They wanted to purchase it from the public. But it is not like that. Only the younger and smaller companies launches their IPOs. Even the privately owned, already established companies could launch their IPOs, okay, which now wanted to be publicly traded. In an IPO, the issuer obtains the assistance of an underwriting firm. That firm actually helps the determiner what type of security is to be issued, the best offering price on which the security would be available, and the amount of shares and the number of shares that to be issued and the time to bring it to the market. Accordingly, the company that is launching the IPO works. Then we have IPPB. This is actually the Indian Post Payments Bank, IPB. Has been incorporated as a public sector company under the Department of Post with 100% Government of India equity, which means it is totally government owned. Got it? Now we have the IRBI, the Industrial Reconstruction Bank of India. It is required to provide the financial assistance as well as to revive the revitalized sick industry units in public and private sectors. And that was set up in 1971 with a share capital of rupees 10 crores. Got it? Now let's move forward. We have the IRDAI. The IRDAI stands out for Insurance Regulatory and Development Authority of India. This is actually an autonomous statutory agency, have been provided with the task to regulate and promoting the insurance and reinsurance industries in the country. Agency headquarters lies at Hyderabad in the state of Telangana. The IRO, interest rate option. It is a financial derivative allowing the holder to benefit from changes in interest rate. Typically, the movement follows an underlying benchmark rate, and this is like an yield on the 10-year treasury notes. IRR, the internal rate of return, which is a method of calculating the rate of return. The term internal refers to the fact that its calculation does not involving any external factors, such as inflation or the cost of capital. ISIC, the International Standard Industrial Classification. It is of all economic activities, is a United Nations industry classification system. Wide use has been made of ISIC in classifying the data according to the kind of economic activity in the fields of employment and health data. The KCC, or the Kisan Credit Card Scheme. It is a credit card scheme introduced in August 1998 by Indian banks. The model scheme was prepared by the National Bank for Agricultural and Rural Development (NABARD) on the recommendations of R.B. Gupta. to provide term loans and agricultural needs. The KVP, Karur Vysya Bank. It is an oldest private sector bank in country, headquartered in Karur, Tamil Nadu, set up in 1916 by M.A. Venkatarama Chettiar and Ati Krishna Chettiar. KVIC, the Khadi and Village Industry Commission, a statutory body formed by the Government of India under the Act of Parliament, the Khadi and Village Industries Commission Act of 1956. The KVP actually, Kisan Vikas Patra, a small saving instrument facilitate the people to invest in the long-term savings plan. The scheme was originally introduced by the Government of India in the year of 1988, but due to some reasons, the government has uplifted the scheme. Again, the scheme got reintroduced in 2014 by making some changes. The KYC, knowing your customer, the process of business identifying and verifying the identity of its clients. Term is also used to refer to the bank and anti-money laundering regulations which govern these activities. The LAB, local area banks. Small private banks conceived as low-cost structures provide efficient and competitive financial intermediation services. Limited area of operation has been assigned to these banks. LAF, the Liquidity Adjustment Facility. Is a tool used in monetary policy allowing banks to borrow money through repurchase agreements. Arrangement allows banks to respond to the liquidity pressure issued by the governments to assure the basic stability in the financial markets. The LIBOR, London Interbank Offered Rate. Actually a benchmark rate that some of the world's leading banks charge each other for short-term loans. LTCG, long-term capital gain or loss, is a gain or loss from a qualifying investment owned for longer than 12 months before it was sold. Amount of an asset sales that counts toward a capital gain or loss is the difference between the sale value and the purchase value, or simply the amount of money the investor gained or lost when he sold the asset. The long-term capital gains assigned to lower tax rate than the short-term capital gains in the United States. The LTN, long-term notes. Payable refers to an agreement a company enters into with another party, includes a formal written promise to pay predetermined amounts on some specific dates. The MCA, Ministry of Corporate Affairs, primarily concerned with the Administration of Companies Act 2013 and 1986. Other allied acts and rules of regulations framed under the mainly for regulating the functioning of the corporate sector in accordance with law. MCLR, marginal cost of funds-based lending rates, refers to the minimum interest rates of a bank below which it could not lend, except in some cases allowed by the Reserve Bank of India. It is an internal benchmark or reference rate for the bank. MIBOR, the Mumbai Interbank Offer Rate. One iteration of the interbank rate. It is the rate of interest charged by the bank on a short-term loan to another bank. Banks borrow and lend money to one another on the interbank market in order to maintain the appropriate legal liquidity levels, meet reserve requirements placed on them by the regulators. Interbank rates made available only to the largest and most creditworthy financial institutions. MISCA, the magnetic ink character recognition. Character recognition technology used mainly by the banking industries to ease the processing and clearance of checks and other documents. The MIS, Management Information System, refers to the processing of information through computers and other intelligent devices to manage and support the managerial decision within an organization. MSS, Market Stabilization Scheme, monetary policy intervention by the RBI to withdraw excess liquidity by selling government securities in the economy. MSS was introduced in April 2004. Medium term loan, a loan with a maturity generally between 1 year and 10 years. The Mudra, Micro Unit Supplement and Refinance Agency Bank, a public sector financial institution in India, provides loans at a low rates to the microfinance institution and non-banking financial institution (NBFI), launched by the Prime Minister Narendra Modi on 8 April 2015. The NAV, the net asset value, value per share of a mutual funds or an exchange traded fund on a specific date or time. With both security types, the per share dollar amount of the fund is based on the total value of all the securities in its portfolio, any liabilities the fund has, and the number of fund shares outstanding. NBFC, non-banking financial companies. Financial institutions offers the various banking services to not having a banking license. Generally, these institutions not allowed to take deposits from the public, which keeps them outside the scope of traditional oversight required under the banking regulations. NBFCs could offer the financial services like the loans and credit facilities, retirement planning, money markets, underwriting, and merger activities. NDS, Negotiated Dealing System, an electronic trading platform operated by the Reserve Bank of India, used to facilitate the exchange of government securities and other money market instruments. Negotiated dealing system will also be responsible for hosting new issues of government securities. NDTL, net demand and liabilities. Sum of demand and time liabilities deposits of banks with public and other banks, wherein assets with other banks is subtracted to get net liability of the banks. Deposit of banks are its liability and consist of demand and time deposits of public and other banks. NECS, National Electronic Clearing Services, aim to centralize the electronic clearing services operation and bring in uniformity and efficiency to the system. NEFT, National Electronic Fund Transfer, nationwide payment system facilitating the one-to-one fund transfer. Under the schemes, individual firms and corporates could electronic transfer funds from one bank to any individual firm or corporate having an account with any other bank branch in the country participating in the scheme. NFA, no frills account, bank account that could be opened and maintained with a zero balance, levies zero or nominal charges, does away with unnecessary services or frills. The downside of such an account is that most of the facilities offered are limited. Once this limit is exceeded, the bank charges for their services. The NFS, National Financial Switch, largest network of shared automatic teller machines (ATMs) in India, designed, developed, and deployed by the Institute for Development Research in Internet Banking in 2004, with the goal of interconnecting the ATMs in the country and facilitating the convenience banking. Run by the National Payments Corporation of India (NPCI), the NHB, National Housing Bank, wholly owned subsidiary of Reserve Bank of India, set up on July 9, 1988 under the National Housing Bank Act 1987. NHB is a apex financial institution for housing loans. NIB, Nordic Investment Bank, international financial institution founded in the mid 1970s by the 5 Nordic countries like Denmark, Finland, Iceland, Norway, and Sweden. 2005, Estonia, Latvia, and Lithuania becomes the member of the bank. The NPA, non-performing assets, defined as a credit facility in respect of which the interest and or installment of the principal remains past due for a specific period of time. Simple terms, an asset that is taken as non-performing when it ceases to generate income for the lender. Then the NPCI, National Payments Corporation of India, umbrella organization for all retail payment systems in India, aims to allow and all Indian citizens to have unrestricted access to e-payment systems. NPS, National Pension Scheme. Government-sponsored pension scheme launched in January 2004 for government employees. Open to all sections in 2009. A subscriber could contribute regularly in a pension account during her working life, withdraw a part of the corpus in a lump sum, and use the remaining corpus to buy an annuity to secure a regular income after retirement. NPV, Net Present Value. Difference between the present value of cash inflows and the present value of cash outflows over the period of time. NPV used in capital budgeting to analyze the profitability of a projected investment or project. NRE, non-resident external account, refers to the funds deposited within financial institution, allowing for the efficient conversion and transfer of Indian and foreign currency, both within and outside of India. NRI, non-resident Indian. It is actually the Indian citizen who stays abroad for employment, carrying on business or vocation outside India, stays abroad under circumstances indicating an intention for an uncertain duration of stay abroad is a non-resident. NSE, National Stock Exchange of India Limited. Leading stock exchange of India located in Mumbai, got established in 1992 as the first demutualized electronic exchange in the country. The NSFDC, National Scheduled Caste Financials and Development Corporation, institution under the Ministry of Social Justice and Empowerment, Government of India, for financing, facilitating and mobilizing funds for the economic empowerment of persons belonging to the scheduled caste families living below double the poverty line. OCB, Overseas Corporate Body, means a company, partnership firm, society, and other corporate body located outside the India, but owned directly or indirectly by the non-resident Indians at least 60%. And it includes overseas trust in which not less than 60% beneficial interest is held by the non-resident Indians directly or indirectly. But OECD, the Organization for Economic Cooperation and Development, is a group of 34 member countries discuss and development economic and social policies. OECD members, democratic countries that support the free market economics. ALTAS, one online tax accounting system. System mainly used in the collection of direct taxes from relevant individuals as well as companies organizations. Income tax department strategy to acquire the information as well as to keep a record of all the tax that has been paid via banks through the upholding of the details of the online chart. OMO, open market operations, refer to the buying and selling of government securities in the open market in order to expand or contract the amount of money in the banking system. Securities purchase inject money into the banking system and stimulate growth. Sales of securities do not oppose it and contract the economy. OTCI, Over-the-Counter Exchange of India, based in Mumbai, Maharashtra, India's first exchange for small companies as well as the first screen-based nationalized stock exchange in India. OTP, one-time password that is valid for only one login session or transaction on a computer system or another digital device. PAX, Primary Agriculture Credit Society, basic unit and smallest cooperative credit institution in India, works as the grassroots level. PAN, Permanent Account Number, code that acts as an identification for individual families and corporates, especially those who pay income tax. Unique 10-character alphanumeric identifier issued to all judicial entities identifiable under the Indian Income Tax 1961. PFRDA, the Pension Fund Regulatory and Implement Authority, Pension Regulator of India, which was established by Government of India on August 23, 2003 and was authorized by the Ministry of Finance, Department of Financial Services. PIN, a personal identification number, numerical code used in many electronic financial transactions. Personal identification number usually issued in institution with payment cards and may be required to complete a transaction. Thereafter, we have QIB, a qualified institutional buyer. It is a corporation that is deemed to be an accredited investor as defined in the Securities and Exchange Commission Rule 501, Regulation D. A QIB owns and invests a minimum of 100 million security on a discretionary basis. The broker-dealer threshold is 10 million. RDBMS, Relational Database Management System, is a database management system based on the relation model invented by Edgar Foucault of IBM's Sanjor Research Laboratory fame. Most database is widespread use today are based on this relational database model. REC, Rural Electrification Corporation Limited, public infrastructure finance company in India's power sector. The company finances and promotes the rural electrification projects across India. RIDF, Rural Infrastructure Development Fund, got set up by Government of India 1995 to 1996 for financing ongoing rural infrastructure projects. Fund is maintained by the National Bank for Agriculture and Rural Development. ROA, the return on assets is a financial ratio shows the percentage of profit a company earns in relation to all overall resources. commonly defined as net income divided by total assets. ROE, return on equity. It is the amount of income returned as a percentage of shareholders' equity. Return on equity measures a corporation profitability by revealing how much profit a company generates with the money shareholders have invested. RTGS, the real-time gross settlement system, a specialized funds transfer system where the transfer of money or security take place from one bank to another on a real time and on a gross basis. RWA, the risk-weighted assets, used to determine the minimum amount of capital that must be held by the banks and other institutions to reduce the risk of insolvency. Capital requirement based on the risk assessment for each type of bank asset. SARFAESI, Securitization and Reconstruction of Financial Assets and Enforcement of Securities Interest Act 2002. It is an Indian law allowing the banks and other financial institutions to auction the residential or commercial properties to recover the loans. Then we have SCC, Selective Credit Control. It is a tool in the hands of Reserve Bank of India to restrict the bank's finance against sensitive communities. SDR, a special drawing rights, supplementary to the foreign exchange reserve assets defined and maintained by the International Monetary Fund. SEPA, Single Euro Payments Area, Payment Integration Initiative of the European Union for Simplification of Bank Transfer dominated in Europe. SFMS, the Structured Financial Messaging System, secure messaging standard developed to serve as a platform for intra-bank and interbank application. It is an Indian standard similar to SWIFT, Society for Worldwide Internet Bank Financial Telecommunication, which is actually the international messaging system used for financial messaging globally. Sovereign gold bond, government securities denominated in grams of gold. Substitutes for holding physical gold, investors have to pay the issue price in cash and the bonds will be redeemed in the case of maturity. The bond is issued by the Reserve Bank of India on behalf of Government of India. SAG, the self-help group, small voluntary associations of poor people, preferably from the small socio-economic background, come together for the purpose of solving their common problems through a self-help and mutual help. The SAG promotes a small saving amongst the members. The savings keep with the bank. SIFI, systematically important financial institution, is a bank, insurance company, or other financial institutions whose failure might trigger a financial crisis. SIP, systematic investment plan, investment vehicle offered by the mutual funds to investors, allowing them to invest small amounts periodically instead of lump sum. Frequency of investment is usually weekly, monthly, or quarterly. SIPs, it is actually the systematically important payment systems, refers to large value and retail payment institutions system, owing to their transaction volume, market share, cross-border relevance, and provision of services to other infrastructure, deemed significant for financial stability. SLR, statutory liquidity ratio, Indian government term for the reserve requirement that the commercial bank in terms are required to maintain in the form of cash, gold reserves, government approved securities before providing credit to the customers. SLRS, Scheme for Liberation and Rehabilitation of Scavengers, launched by the Government of India on 22nd March 1982. Objective of the scheme is to liberate the scavengers and their departments from their existing hereditary and obnoxious occupations. Samara, SME Rating Agency, full service credit rating agency, exclusive setup for micro and small medium enterprises in India, grown to the rate SME, mid and large corporate. Smile, SIDBI Make in India soft loan fund for micro, small and medium enterprises, launched during financial year 15 to 16 as an INR 10,000 crore fund by SIDBI, in the line with the Government of India's ambition Make in India initiative. The target sectors under SMILE includes all the identified 25 Make in India sectors as indicated by the Government Make in India program. SPNS, Shared Payment Network System. IBA set up a shared payment network system or SAVADHAN network of ATMs of its member bank in Mumbai. Network went to live on February 1, 1997. Objective behind the SAVADHAN network is to provide 24 hours, 7 days in a week and 365 days in a year electronic banking service to the customer of a member bank anywhere in the city of Mumbai. SSI, the Small Scale Industries, also known as MSMEs, refined at categories by the Micro and Small and Medium Enterprises Development Act 2006. Act categorizes the different scale of industries on the basis of investment in plant and machinery in case of manufacturing industries, on the basis of investment in equipment in case of service sector industries. SWIFT, Society for Worldwide Interbank Financial Communication, provides a network, enables the financial institutions worldwide to send and receive information about financial transactions in a secure, standardized and reliable environment. TDS, Tax Deducted at Source, means collecting of tax in India under the Indian Tax Act of 1961. Any payment covered under these provisions shall be paid after deducting prescribed percentage. TIN, Tax Information Network, initiative done by the Income Tax Department for the modernization of the current system for collecting, processing, monitoring, accounting of direct taxes using IT or information technology. 10 is a repository of national tax information has been established by NSTL E-Governance Infrastructure Limited on behalf of ITT. The UCC, Uniform Commercial Code, set of laws that provides legal rules and regulations governing commercial or business dealings and transactions, regulates the transfer or sale of personal property. UIDI, Unique Identification Authority of India. The statute authority establishes the provision of Aadhaar, okay, and for the Ministry of Electronics and Information Technology, it comes under. UPI, Unified Payment Interface, is actually works under the NPCI and works for instantly transfer funds between two banks accounts using a mobile platform. USSD, Unstructured Supplementary Service Data, global system for mobile communication technology used to send text between a mobile phone and an application program in the network. Applications may include the prepaid roaming or mobile chatting. UTI, Unit Trust of India Mutual Funds carved out of the Eastwhile as a SEBI registered mutual fund from 1st January 2003. VPN, Virtual Payment Address, identifier that could be uniquely mapped to an individual account. UPI services offer customers the option to create any number of VPAs for receiving payments. WBCI, Weather-Based Crop Insurance, aims to mitigate the insured crops. Then WCA, Working Capital Term Loans. WMC, Ways and Means Committee. WPI, Wholesale Price Index, is like the CPI, but it's actually worked on the wholesale. YTM, Yield to Maturity, total return anticipated on the bond if the bond is held until it matures. Here we have finished the topic. Now it's a part for summary. In market instruments, we have seen FCCB, ECS, CIBIL. Development banks, we have seen EADB, EBRD. Miscellaneous terms, we have seen BOT, CIBIL, CBDS. Key financial terms and acronyms, we have seen NEFT, NFA, NFS, NHB, NIB, NPA, NPCI. NPS, NPB, NRI, NRE, NSE, NSFDC, OCB. Then OECD, Alters, OMO, OTCEI, OTP, PCS, PAN, PFRD. P-Notes, POA, POS, PPF, PPI, QIB, RDB, MS. Then we have seen REC, RADF, ROA, ROE, RTGS, RWS, SARFAC. Then SCC, STR, SCPA, SFMS, SGB, SHG, SIFI. Then we have seen SIP, SLR, SME, SWIFT, TDS, TIN, UCC, UIDI. Then UPI, USSD, UTI, VPA, WBCI, WCTL, WFMC, VPI, ATM. Okay. So here we have finished the topic. It is requested to all of you, kindly revise all the facts and figures that we have discussed in this lecture and keep yourself ready for the next lecture. With this note, let's end this lecture and thank you.